Hi, good evening. My name is Scott, and I'm with the Financial Readiness Program here on JBLM. Thank you for joining me this evening to talk about the recently implemented Social Security Deferral Policy. Whether you are a service member, family member, or DoD civilian, I am here to explain what the tax deferral means for you and to answer any questions you might have about it. So the official policy is it's all about placing more income, more spending money into Americans' pockets during COVID-19. A presidential memorandum was issued on August 8th that is going to temporarily defer the Social Security tax withholdings between September 1st, 2020 and December 31st, 2020. So what does all this mean? You might have noticed that your most recent paycheck is larger than what you're normally used to. So for the remainder of 2020, the Social Security tax that is normally withheld from your pay is not going to be withheld. This means your paychecks for the remainder of 2020 are going to be larger. So not everyone is going to be affected by the Social Security deferral policy. For DoD civilians, those of you that will have your taxes deferred are those that are earning whose gross pay is less than $4,000 in any given pay period over the next 4 months. For the Seattle-Tacoma area and those based on JBLM, this is GS 1 through 11, GS 12 step 1 through 8, and GS 13 step 1 through 2. Now keep in mind this is only for the Seattle-Tacoma locality pay area. Any areas outside of that area are not going to be, they're going to have different pay grades will be affected. For those of you that are in the military, the wage cutoff is $8,666.66. That would be your monthly base pay. So those service members that will have their taxes deferred is all enlisted soldiers, all 01s through 04, so second lieutenant through major, all lieutenant colonels with 14 years, who have 14 years of pay or less, and also 06s who have 12 years or less for pay purposes. So those will have their taxes deferred. For civilians who work for a civilian employer, under this policy, civilian employers have the option to either participate or not participate in the Social Security Deferral Program. So it's best to ask your employer if they are going to participate in the program. For all government employees within the DoD, this policy is mandatory. So all executive branch agencies within the federal government are required to participate in the Social Security deferral. So a common question I often get is, can I opt out of this personally? So the answer is no, because it is required for all service members and DoD civilians within the DoD and the federal government. For most service members, for all service members, everyone across America, the actual tax rate is 6.2%. That's the going tax rate for Social Security. Now for service members, this 6.2% is calculated based on your base pay. However, if you are making contributions to the Montgomery GI Bill, your $100 monthly payment will be deducted from your base pay, and then your 6.2% will be based on your base pay minus that $100 contribution you're making to your Montgomery GI Bill. So if you want to know how much you're paying in Social Security, a good reference is to use your August LES. So before this policy took effect, look at your August LES, and under the deductions column, you're going to see something called FICA, FICA-SOC Security. And the amount next to that is the monthly amount that you are paying for Social Security. So this is for service members. Now for DoD civilians, it's a little more complicated than that. This tax is based on your taxable wages. And so taxable wages are computed as your gross pay, which will be your hourly rate pay times the number of hours that you worked in that pay period, minus any federal employee health benefits, dental, vision, and health flexible spending accounts. So if you are paying into those 4 programs, that amount is going to be deducted from your gross wages. And so therefore, what's left is going to be what's known as your taxable wages. And so under the deductions column or deductions section on the civilian LES, you're going to see something called OASDI. And so OASDI is just it's an acronym that stands for old age, survivors and disability insurance. This is just another name for Social Security. So on the military LES, you'll see Social Security. On the civilian LES, you're going to see OASDI. And once again, to see how much you have been paying into this Social Security, you want to look at your previous LES. So look at one of your LESs from August or a previous pay period before this current one to see actually how much you were paying into Social Security. A common question I often get is, do I have to pay this money back? So as of right now, the answer is yes. And so the policy is that between January 1st and April 30th of 2021, you are going to have to repay the total amount that was deferred during September to December of 2020. And so as the policy is written, all of this is going to come out evenly. So you don't have the option to make a lump sum payment if that's what you want to do. And DFAS is going to put out further guidance over the next few months of exactly how it's going to work. But the policy, the way it's written in the IRS, is put out that it's going to be taken out as even payments. And so what does this mean? So in 2021, we're going to go back to having our Social Security taxes withheld, and so as normal. So in addition to having your normal Social Security tax withheld, you're also going to have those payments that are going to be coming out to offset the amount that was withheld. So basically, one way to look at it is you're going to have double of your Social Security taken out between January and April of 2021. Now, there is a small chance, or there is an opportunity for all of this to be forgiven, meaning you're not going to have to pay back the money in 2021. Now, the only way that this can happen is if Congress votes and authorizes the forgiveness of this tax. So as of right now, Congress has not taken any action on this, so I highly encourage each of you to anticipate that during the first 4 months of 2021, that the tax deferral, money that was deferred between September and December 2020 is going to be taken out of your pay. So what that means is you're going to have smaller paychecks between January and April of 2021. Now, how do you best prepare for this? First thing I recommend you do is figure out what your Social Security liability is, meaning go to your previous LES and look at how much Social Security was taken out for each of your paychecks. Take that amount, and it should be the extra amount that's coming into your paychecks over the next 4 months. So take that amount, put that into a savings account. And so over the next 4 months, if you keep putting that Social Security money into the savings account, you're going to have, you're going to basically have 4 months of Social Security payments in the savings account. And so what happens if Congress does not act, meaning you're going to have to pay this money back, you're going to have this Social Security money sitting in your savings account that you are able to pay for whatever bills you might have, or any to make up for the smaller paychecks that you'll have. And if Congress does act on this, well, you're just going to have some extra money in your savings account that you can use for other things. Does anybody have any questions? No questions? Some questions are, how will this affect my federal taxes? The answer is it is not going to affect your federal taxes. This is simply for Social Security purposes. Some other questions we might have is, will this affect my thrift savings plan contributions? The answer is no. Thrift savings plan contributions are separate from Social Security tax withholdings. Let's see. So another question that often comes up is for civilian employees. One of them being, what if I'm on the cusp of making $4,000 in a pay period? If I make more than $4,000 in a given pay period, am I going to be exempt from having my money deferred for the remaining 4 months? The answer to that is no. It goes per pay period. So if one pay period you're under $4,000, you're going to have your Social Security tax deferred. If, say, the next period you put in some overtime or you get promoted and your gross wages go above, or your taxable wages go above $4,000, then your Social Security taxes for that pay period are not going to be withheld. So it goes by per pay period for everyone. Are there any questions? No? All right, well, if you have any more questions or want to talk further about this, highly encourage you to give us a call. Call the Financial Readiness Program. There's financial counselors that are eager and ready to answer your questions and sit down and talk with you and figure out how to best comply with this policy, how to best be proactive and put the money in your savings account. You can contact us at 253-967-1453, or you can walk into Waller Hall. You can come on to McCord in building number 100, or in North Fort, we have a financial counselor over there as well. Also, if you work in the SBAC, we have one financial counselor there as well. So, if there's no questions, I appreciate your time, and thank you for tuning in this evening. Thank you.